So tell me about this chart here, Vanessa.
Well, it's close to its resistance,
Okay.
and I'm hoping it'll break through, but I'm gonna hold on to that for a minute.
Okay.
Well, really, I would like to sell 5 shares of that though, because I found a couple other things that I'd like to look at.
Okay. So 5. All right. Okay. And let me go to your foe first before we get to those other ones. All right. So this is water play, water ETF. Okay, go ahead.
I'll keep that one.
Okay. Tell us about your chart a little bit.
It looks like it's getting ready to hit resistance again. I mean, it's at the top of its level at this highest point.
Mm-hmm.
But it's been gradually just kind of like inching up a little bit every day. So I'm just kind of curious to see where this one is going to go.
Okay. Now let me ask you all this question for everybody. Of these plays that we're tracking here that you have chosen for your stocks, are you using your real portfolios to buy any of these, or these are just more like your fantasy stocks that you're tracking?
I'm actually doing it for real too.
Okay. All right. Anybody else?
I have them for real, but I've had them for a while. So like I've had Ollie's for a bit, and ATV I did just do that guy, and I also have Facebook. Okay. But I've had that one for a while too.
Okay, good. Anybody else?
I got
Neo. Do you own Neo, Kyle?
Oh yeah, absolutely.
Barry, do you have any that Tesla? All right, I'm gonna be on mute. Wolf.
No, I don't.
Okay. All right, don't own Tesla. Okay, Wolf. Who is Wolf? What's the real name there? Is that Troy?
Oops, I'm sorry. I'm on my phone.
Oh, what's up, Milton?
Yeah.
That's Milton. Let me rename it, if you don't mind. All right, got you. Okay, Milton. Let's see what you have, Milton. You had PLTR. Let's pull that up. Okay. Wait for the chart to render here. I'm not sure why my computer is so slow. I have to reboot it later. I know we had this thing charted. Let me give it a second. Maybe we didn't. We'll just chart it up. Milt, you want to do the support and resistance on this? Oh, there it is. Thought we had it charted. Everything is so slow this morning. So tell us about this chart here, Milt.
Okay. Right now, this stock is giving me a headache. It's still undecided what it's going to do. Right now, I think we talked about this last week, but I'm playing this with options.
Okay.
So I have a deep in the money put credit spread on this.
Okay.
The only reason I'm saying this is for you. I know everybody else knows what the crap he's talking about.
Yes, sir.
So basically, I'm just waiting.
Okay. Well, how much premium you collect on that? Well, if you don't mind me asking, on one of those contracts.
$1.
Okay. And your expiration is what?
September 3rd.
Okay. All right. So September 3rd. Oh, okay. You only got about 2 weeks left on that. And so you bought it at $1. What is it trading at now?
It's actually $1 and something. It's probably going to get executed. Well, it may not, depending on this stock.
Okay.
It's still in the undecided area where it's going up and down. So no matter what happened, I'm okay with it.
Okay, let's. All right. I know you got me curious. I just want to see the options chain on it real quick.
Yeah, it's September 25.
Okay.
September 3rd, $25.
I'm trying to. Yahoo used to have. Let me see if they got the options chain. Yeah, here we go.
Since I am gonna own this one, I got really aggressive and took the premium.
Okay. September 3rd. Oh, my machine is delayed, so. It's not switching to the 3rd. Okay. Slow. September 3rd, 25 is what you said here.
Yes.
All right, and you gotta put. Okay. What's your and if it's a credit spread, what are you on the long side and what are you on the short side? What's your spread? What's your spread
Excuse
on it?
me, I misspoke. It's not a credit spread.
Okay.
It's just a put.
Oh, you
I'm
just
sorry,
okay.
put credit.
You just sold a put. Okay. Gotcha.
Yeah, sold a put. Yeah, sorry.
Oh, no,
I misspoke. I was thinking about that, but I did not do that.
Okay. All right. Interesting. We're gonna come back to that. You got me. I wanted to talk about that a little bit more. Let's get through everybody else, or let's see. Go back here. All right. Okay, I think that's everybody. All right. Sam, I know it's your first time on, but is there a stock that you're that you may want to follow, a company or product that you buy that you may want to put in as yours? And then I can use it as an example to kind of walk you through some pieces, but I can get it annotated here. Sam, can you hear me? You're on mute.
Yo, yeah, I just said, just pick one for me if you could. Me being brand new at everything, I don't know where to start.
Let's see. Let's do. I think John got Nike. Trying to think. Let's see. You're in the education field. Let's do a. Trying to think. Anybody know a good education stock? Something that's closely aligned with education. Somebody help me out here. I'm drawing a blank.
How about something technical that's also playing education, Apple or Microsoft?
You know what? Let's try Microsoft. Thanks, Milk. That's a good one. Try Microsoft. All right. So Microsoft 304. We'll just do half of that. So we say about 18 should be about 5 grand. So 17, 16. So we say 8. Do 8 of those. Okay. So thanks, Milk. So for that, Sam. All right. So what we do is we'll go to Microsoft. So every stock has a ticker. And ticker for Microsoft is MSFT. And we're just going to do support and resistance. Again, we talk about the peaks and the valleys. So starting off, like for new people, what I try to do is use this method. It actually helps to kind of see. So we talk about peaks and valleys, right? So that's a peak. And it's a little peak. That's a peak. That's a peak, right? So just high areas on the chart, right? Where it went up to a point and reversed. So just drawing all of these peaks here. And I'll draw this one as 1. But do you see those, Sam? All of those peaks. on the chart?
Yes.
Okay. So in each one of those peaks are going to be referred to as a support or resistance line. And if the peak is higher than where the current price is, so the current price is going to always be the furthest bar to the right. So this is the current price. So if I draw this one here, in the tool, it's just Alt H key combination on the keyboard, and it draws a horizontal line. So this will be a resistance line because it's higher than the current price. Whereas if I draw this one here, it's lower, so that'll be a support. So every other line that I draw here is going to be support because they're lower than what the current price is. So all I'm doing is just drawing these horizontals to where we put these peaks and valleys in. Now, I missed some right here in terms of valleys, but you can see here that this area right here was still kind of covered based upon this peak here. And so I don't have to draw that one separately because it's accounted for. All right, kind of same right here. Got these 4. Didn't draw these, so it's a good area to put one in as a valley, right? Definitely these 3 here. And I'll do these right there. So you can kind of see where we got each of those marks at. We got a horizontal line that goes with those. So that's helps us to get our support and resistance. What this does is all of these points on this chart, basically the green and the reds, they just show the price movement for that particular stock. And it's those are actual sales, and they've been added together from all the market participants on a particular day. So here we're on a daily chart. So this candlesticks just represent a day. If it's green, it means that it closed up. If it's red, it means it closed down. And depending upon what time selection that you have here is what the bar represents. So I'm on a daily, as you can see here, 1 day. So this represents on 1 day. So that's yesterday, Thursday, Wednesday, Tuesday, Monday, so on and so forth. And because of that, that helps us to kind of see what the market participants did with buying and selling the stock over time. And then you start to recognize patterns here. So that's just a really quick run through there. And I got some videos that go through and kind of show this again and maybe a little bit more details. And so I'll send you the link to those so you can watch them and kind of get up to speed. But it's just a repetitive thing. The more and more you see it, the more and more your eyes, get trained to kind of identify these things. Then you can actually, follow and put stuff in. So.
Gotcha.
Yep.
Thanks.
Yes, sir. So that's the Microsoft. Now, and what we do here is that, so we have in this fictitious trading account, for whatever reason, my computer is not acting right today, so I can't show it on the screen here. But so I'm going to purchase 8 shares of Microsoft with the current market price of 304. So that gives you a balance of, 24 and some change, depending upon when it actually fills. So what happens is, let me put it. So on Monday, what we'll do, we'll put a market order in, and wherever it fills at, that will be your entry price as of Monday, because the market is actually closed today. And then from there, we can actually track your performance here. And the idea of each person having a stock, and then we go through the charts, then you'll be able to, as we go through and you learn more, you'll be able to say, hey, do I want to buy, sell, or hold, kind of what we was going through the list, and people giving their rationale for why they're doing so. So that's the skinny on that. All right. Let's see if we got anybody else join that I missed. All right. So Angela want me to pick something for you. I think Angela, I want to say at some point, I know you like those cruise ships. Let's look at CCL.
This is something you want me to track through the week?
Yeah, what is it that you hold? Just give me a stock that you hold.
I hold Delta.
Okay, Delta. That's right, Delta. Thank you. All right. I know you can't talk, so I was really just kind of saying this for your sake. You can hear me, and if you can't respond, that's fine. I understand. But all right. So let's look at this Delta. Actually, Delta is right here at support at this 37. Now we're in a downtrend. So let me draw this downtrend line on Delta. So as you go through, we was drawing these peaks and valleys. So we got our support and resistance. But you can see here from June 21st until now, Delta's been in a free fall. So you can draw. So if you take the top of any candle and you attach it to another top, so that point that I started, and I'm gonna use the top of this one right here, and then I'm gonna just let the slope of the line stay the same. And so this is called a downtrend. And so Delta's definitely been in a downtrend. You just look at it visually and see. Now we're at a support area here of 37. So we're gonna take some Delta. We can put an order in to buy you some Delta here at 37, Angie. I'll say I'll just take half of what you got. So 25 is 1,000, so probably 65, maybe. Yep. So 65 will get you half of your area. And when it fills, I'll put the orders in on the app. And when it fills, we'll get it. And I'll put the actual entry date. And then that way we can start tracking the performance of your trading as you go through. Okay. So that'll be yours. And I'll do the same for these. So each week, if you have new changes, I'll put these orders into the system, and then we'll get it to track. I'm not sure why my computer's acting up, because I usually be able to show it right here on the right. But for some reason, it's why crazy today. But we'll go through those. All right, let's see if I can get this to show back real quick. If you don't, I'm not gonna work. Okay. So that's that. I think we covered everybody. All right, I have something I want to talk about. Vanessa, you were about to say something.
Yeah, I was gonna say if you, mine is the sell. Yeah, I guess you need to move it to the other spreadsheet, the 5 NVIDIA.
Ah, you're right. Good catch. Thank you.
Mm-hmm.
Thanks for that. All right, and I'll get that put in, and we'll get it tracked. Thanks. Oh, I'm glad you mentioned that. Brenda, you said that for the one that we was gonna track for Curtis.
Yeah, he said he'd watch the video later on, so he wanted some recommendations since it looks like they're pretty down. Hear your thoughts on them.
Okay, let's chart it up. So Sam, this would be a good one. It's another, and again, same process, but the more and more you see it, it'll come for you. So if we're drawing just the peaks, again, wrong tool. So peak here. Where did the stock go up, get to a high, then it pivot, then it go down? Where did it go up, get to a high, pivot, come down? So that's really all we're doing, is just drawing these peaks. So here, got here, got here, got here. So you can just draw all of these as one. Came up here, got to this point, reversed. So these are just your peaks. And right, if I want to be technical and draw them all, those are like all the peaks. Now you can see for just this general area. So you say, okay, now do I have any of these that are close enough to another that I can have one horizontal line to represent them both? So for here, the answer is no. So that would be one there. Yeah, I got something pretty close here. I'll split the difference between these two. That's one there. This one is close enough to that one, so I won't draw that one. This one here, you kind of got that, and this one, so I will draw this one here to represent this point, and this point. So that's where the reasoning for that horizontal there. All right. Then I got this one right here. Okay. Now you can see this one is interesting because even though that's a peak, look at where you got some parts where it actually correspond to some valleys at. So we haven't drawn the valleys. I'm gonna use a different color. Draw the valleys. Let's use a. All right, so the valleys, just the lower parts on the chart here. Could have drew this one technically, but it's a better area. That one, that one, that one. So for the old heads, we see this all the time, but just want to illustrate through, right? So you got this one, this one, this one, this one. These four, they're really close to each other. I'm gonna just draw it here to represent all those four, right? You got this one, and this one. Since you have this one here, I'm gonna draw this as a single one to represent those. Okay, and draw this one to represent this part, and then this peak here. And actually you got a couple peaks here and a valley there. I'll use this one to draw that one. And then lastly, I can draw this one right here. All right, so you can see, how those became our support and resistance. And so on the other charts, you won't see the peaks and valleys because we just kind of eyeball it and draw them through. But we go through that technique when you're first starting out to kind of train your eyes to mark them. And then you draw the horizontal lines afterwards. So given Solar Edge brand is actually in a medium term uptrend from here. But since the short term, last couple of weeks, it's been in a downfall. It hit this support area of 307 and back down to 264. So if I were looking at this and I had to make a recommendation, I would say, where are my strongest, and this is a question for everybody, where are the strongest support areas on this chart? And tell me why you think it is. That's a question for everybody. Bueller.
Looks like where it's sitting is a good support area there. Something to watch to see if it breaks below it or
Okay.
not.
Okay.
Because you got quite a few touch points at where it's sitting right now.
Very good. Yes, absolutely. Bunch of touch points, and that's what you want to see. Look at all these touch points at this current level of support. And what you want to do, you want to go through it. Yeah. I'm sorry, say it again, Barry. I thought that was Barry, or was that somebody else talking? I'm sorry. Okay, I couldn't quite make out that comment. But you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you got 10 areas on this support line, meaning that it has gotten to this area and reversed or either touched and broke through several times. But yeah, Brendan, I would agree that this current area of the what is that, 266 is definitely a good area. So if I expand that, you'll see what's the current price, 269.88, right? So this is a good support area. So that will be the strongest area of support. And then from there, the next area probably be this area here. 1, 2, 3. Now this chart is getting pretty busy, but we're illustrating different things. So we wouldn't have all of this on the chart, but it's to help show the point. So the first area of support will be, and I'll just call it S1. And then let me move it out so y'all can see it. So that's S1, and then here I would say This is the second level support. Just call it S2. And this one is stronger than this one because there are more touch points on this horizontal piece than this. Now, also what you want to see is, let's see if that coincides. I'm gonna kill this because it's not worth it. Make the screen bigger. This also coincides with let's see if we have volume that touch base with this. So here, all right, so we got a high volume area here, and this is volume is down here at the bottom, but I'm just using the horizontal piece here to see. So high volume area here, got another high volume area here, but that's not the same point. So really no high volume there, no high volume there, not there. Here had a little bit of volume there, not exceptionally high. Had an exceptionally high piece of volume area right here, but that was related more to what's underneath as opposed to right at this area. So you really can't count that one. But this is where, so if I draw this as a box, you can see this pretty clear. Buyers have come in at this area and moved it back up several times. Let me change this, make it a little bit darker. Let's try that again, fill it. All right. Thank you. All right, so this area here, you can see that area, right? So that's a stronger level support because you got about 8 or 9 points on it, whereas this second level is a little bit less. So you got about 5 points there. So that's the S1 and the S2. So Brent, I would say I would buy, if this is long term, I would buy some more S1 here. Let's see what Kurt has. Oh, he done used up about all of his. He only got about, it's down 43 market value, starting position. He's gonna get about $300 left. Actually 280, 275, 274 to be exact. So you could buy one more share if we can put that in. And at the, right, so we'll put that in, one share. So that'll be about his 5,000. Yeah. So we'll see if we get that filled for him. And we'll go from there. Let's see. And now we could buy here or we could wait. We could wait to this 237 if he didn't think that that would hold. But I would take my probabilities here and possibly buy at this 258. But if it did break down, then that 237 may be in play. All right.
Makes sense.
I'm sorry, say again.
Nope, I said makes sense. So he
Okay.
can listen to that later.
Yes, ma'am. Okay, thanks. Let's see. Let me clear some of this stuff up. Delete this chart. And let me just draw the support and resistance. Just clean it up a little bit. 1 second. So I'm just do the same thing, but I'm not gonna have all those peaks and valleys in there. I'm just look at it visually and draw. It may not be quite exact. It would be close enough for government work. So you see how I'm just kind of drawing these peaks and valleys, just kind of looking at them sideways. And now if if they're not quite exact, I can always, make adjustments to them. But overall, I can live with this. So it makes the chart a little bit cleaner, so you can see them. So again, this would be your S1, this would be your S2, the 358 and 337. I think I was off by maybe 3 or 4 points, but it's fine. All right. Vanessa, did we cover all of what you wanted to in terms of the extra stuff you wanted to look at or no?
There was two I wanted to. After I sell the 5 for NVIDIA, I wanted to buy Pfizer.
All right, let's bring up the Pfizer chart. All right, guide me on your support and resistance, and I'll draw it for you.
Okay. $50 is the first resistance point. Oh, it's already there.
Yeah, it was slow. It was slow and coming up. Yeah, but no, that was a good one though. That's good. That's what we needed to add it. And actually, this is definitely a play. Now, give us some rationale for this. It's kind of obvious, but just explain it through anyway. Why Pfizer?
Because of the talk of the booster shots coming out.
Okay. Yeah, definitely. So with that, and it's implied in what Vanessa said. Take this information that you hear that's going on in the news, maybe in a particular industry that you work in, and if you hear something and you know that there's a stock that's related to that particular piece of news, and you think it can be beneficial, then go look up that stock and say, hey, is one thing I say. If I see commercials, I see some news, I see whatever, particularly commercials, you start seeing commercials for new products or services that you haven't seen before, but you're starting to see them pretty regularly. One of the first questions to ask yourself, is that company or product, the company for that product or service, is it publicly traded? And you can just Google it and say, hey, for instance, you see all these, I'm trying to think of a product or service that I've seen recently. I don't know. I can't think of anything comes to mind. But I would just Google and say, does particular product, is it publicly traded? And if so, it'll tell you what the ticker is for the stock. Sometimes they're not. They're private, and there's really no way to play it directly. And then you just put that stock in, pull up the chart, and see if that piece of news is actually moving the stock. So with all the Delta variant stuff going on, the cases are rising, in addition to the talk of the booster shots. Makes sense. Now, also one thing you want to look at in that case is you say, okay, well, if Pfizer is doing good, who's also in that same space as Pfizer? So want to think about is like Moderna, and I didn't mean to do that. Let's see. Go back to Moderna. Let's see. Is it MDRN? MDRN. What is it? Yeah, mRNA. Yeah. So that's the ticker, mRNA. And so here you can look at this. So we just go back at that. Let's look at that Pfizer chart again. I want to do a comparison. So you look and see with this spike here, right at July 14th. All right, let's go back to mRNA. Hard to say that fast. July 14th, right here. So you can see we got a good spike, but Moderna has been running really all the way from May. So let's just draw the support and resistance here. There. And it's a little valley. And I'll draw it. Got a little peak there. 3 peaks in this general area. I'll connect them with that one. Peak here, peak here. I'll draw that peak. I'll draw this one too. Right? Then you got valley. You got 2 of these valleys right next to each other. I'll split the difference. Got a valley right here. Draw that one. Got a valley here. Got this little valley, but I won't draw that one. And then you got a valley here, right? So this is what a chart looks like, right? So you can see the support and resistance. Then you can start, when you start to see stuff like this in a tight range, think of this as being just that, a trading range, right? So look at this trading range. So you can see you got up, down, midway, back down, up. These could be trades where you buy off the 121, you sell at the 178, comes back to 121, you buy again. If you want to take this sell at 154, that's fine. come back to 121, buy again, sell at 178. And until it got to a point where it broke out, and then it started a new range. And so the next new range, because you had it here, it only gave you like once or twice there. Then it established a new range. Now we got up here and you got this all-time high, then you got to pull back. But that's been 2 heck of a runs up. And so just the trend here has been crazy. So we just draw the trend for this. So again, 2 points. First point here, we'll take this point at this bottom and then just extend the slope the same. All right. So we're still in an uptrend here. And actually you got a trend within a trend. If I were to take this one and draw another uptrend because it was much steeper, I can take these 2 points. And so you got the longer trend, and then you got this shorter trend within this longer trend. And if it holds and goes above this 370, then it's fine. But if it break below, then that first trend will be broken. But it's almost, again, getting close here to this 250, this 352, which is support, right? So in this, you can say, well, Michael, why are you drawing them both? I trust horizontal support as my first indicator. That's my stronger of the two. So what I mean, horizontal support, the blue lines. So for the blue lines, I'm gonna pay attention to this 348 a bit stronger than I'm gonna pay attention to the orange trend line. But if you're in a trade and you don't have a lot of history behind you, you may use the trend line as a signal. So if it breaks here, if you're trading it, you say, okay, I'll sell. So like let's say if I was trading this specifically, and I say, hey, if this trend line gets broken, I'm gonna be a seller anywhere in this yellow area if it gets below that trend line on the first piece. So but at the same time, since I trade horizontal as a higher order area where I say that it's more important than the trend line, then I could wait for this 350. But if I'm just riding a trend, I may just use the trend line. But if I'm waiting on horizontal support, now I can use them both together. I can say, hey, I see it here. If it breaks down and it touches horizontal support, I can be out here at this 350, right? But if this thing continues to go, so let's do it like this. I'm gonna show you something. Let's go back here. And I'm gonna look at it. So we're looking at it kind of like real time where you don't have that history there. So as you're trading this or watching this is say this was today. So as the days unfold, you kind of see each day and what is starting to form. So here we don't have this. Let me erase this. I'll show you. We don't have any data to the left to give us support and resistance here. So that's where a trend line can become valuable for you, where you don't have any prior areas on your line. So if I pull this back, here's like, okay, because this is real, again, this is daily. We don't have that history there. And as it's trading, it's like, oh, okay, I don't have anything. So my trend line helps me here to see when it's gonna go. And then if I draw on that trend line, and actually I really couldn't draw it here. Let's go back. Let me show you. So here we break out, right? And you're like, okay. So you can say, hey, I can take this point here and this point here and draw that trend, right? Because it's real time, I don't have any more data. But if I pull it to the left and just keep watching it play out, now when that trend area is broken, so now I got these last few days, right? If I extend that up, and I say, oh, that trend is broken now. This is an area that you can use that you didn't have any horizontal support up until this point to guide you through. You just said, hey, it broke this trend line here. And then you can see the next few days is going sideways. And you're like, oh, now I can say, I can draw this as a support area because first I got up here, I reversed out. Okay, that can become my first support area. Then I can see I'm starting to go sideways. I get a valley here is just 2 days, not enough. But you can say, I did go sideways right here. And it kind of corresponded to that part. And I can say, that might be a support area. But you see how I didn't have that data necessarily. A little bit here I did. I guess technically you can say I did. But using the trend line to help you to follow the trend. Because you can say, like going back here, follow the trend, gets here, you may sell, or you may just say, hey, let me see what it's going to do. But the trend stayed intact. Got back here, touched again, trend stayed intact. Got here, touched again, and I'm talking about this trend line here. Trend is still intact. So if you're taking this longer term trend, this longer term trend is still intact. It's not violated. Whereas when we took this upward trend here, because it just started to go parabolic, we draw a shorter term trend, and this trend only broke at this point right here. Does that make sense? Yes, no, maybe?
Yes.
Okay. All right.
Yeah,
So
yeah. How would you do her Pfizer though? Because it seems like it's on such a
tear.
beast of a rise. Yeah,
Yeah,
exactly.
let's look.
And would you be afraid that it's too much or that it's going to keep momentum? I'm curious.
Okay. So let's see here. So that's one point we use, and this is the second point, right? Now, in drawing these trends, you have some discretion, these trend lines. So let's say if I took that one, that's a pretty steep, but I could use a different point and make this even tighter, right? So I could say, I could move it up and use this point here. Trying to get it where I can move it. Sorry, I just didn't. So I got that point and that point on the chart, and then I just extended it. So yeah, this Pfizer is going much higher. And here, you're really in no man's land from 42 to 50. So this is where the trend becomes important, because you can say, only if I get a break below this level, and we're getting close right here, if I get a break to the right side of that trend, then I may sell. But if not, I'm gonna just let the trend just continue. And let's just make some assumptions here. Let's say that this trend just continues to keep rising, but it doesn't violate that trend line there. Wrong tool, sorry. If it just keeps rising and I just extend that, if it just keeps going up and it never comes to the right side or break below. So when I'm saying right side, I'm saying this area here. So if it never, trying to redraw it, sorry. Basically, if you say this is the top side, this is the bottom side. If it never comes on this bottom side, the trend is intact. Just keep holding it until it violates and breaks. And then once it breaks, and then you start to get some sideways movement, then that's where it's going to help to identify the peaks of the valley. So this is a peak here that we drew horizontally, but we don't have any more data. Now, if this continues to come down and we get a downtrend here and it breaks to this downside, that's probably where you want to be a seller. But if it just continues to go up and ride on the left side of this line, this upper side of this line, just want to keep holding it, because the trend is not broken. So there's a thing they say sometimes, the trend is your friend. So let's look back at this example here. All right, this is pandemic lows. You just followed that trend. You didn't get a break or a touch to that trend from March up until February. So that was almost a year that you could have rode that. But if you could have waited to that point, but you could have sold out up here as well, because it got to 41 and that's 32. So you're talking about a 30% difference between these two numbers here. But again, if you was just trading a longer trend there, the trend didn't touch until there. Then it started a new trend, touch once, touch twice here, but nothing significantly to the bottom side here. Now the trend broke. This is a break below the trend. Let me make it a little bit bigger so we can see it's kind of small. The trend broke here, right? In this area, let me pull it box down. Trend broke at that point. Then you went sideways, a bunch of sideways trading. Then a new trend started. It got above this previous box level. it cleared all of these. It cleared all of these points here. Cleared all those previous highs. Then a new trend, it just set off again. And now, watch this trend. Watch this trend just continue to stay intact. So look, nothing to the right side of that trend line. And they just started riding that one. So these trend lines can be helpful for you as you draw these on your chart. When you get breakouts and you don't have any horizontal support and resistance to help. You had some support here, but once it starts just rising and going straight up like a hockey stick almost, you really don't have any, your support and resistance lines really don't help you that much there. And that's where the trend line can become important for you. And this is on huge gains in a short period of time, but it also can apply to huge pullbacks in the same period of time, because this could be a downtrend, right? So you can say that's a downtrend right before the pandemic, right? Everything was good. Here, a little China news coming in. Oh, we full on pandemic, and we drop all the way down here. And the trend didn't break back above until April. So you can use down trends and you can use uptrends, but they're helpful when you don't have any. Now, downtrends, you're gonna have prior area on your chart just because it's based on time, right? So anytime you have a downtrend, you should have something to the left of you to show, right? But on an uptrend, you may not, because you may not have any history there. So hopefully that made sense. It helped, but incorporate those. And I'm gonna tell you why this is significant. And actually, I kind of discovered this as we were talking about downtrends and uptrends a few, probably earlier this year. So let's say you're in the stock right here. So let's look at this from what it would look like if you was actually owning it at that time and you don't have that history. Say you're in the stock, right? This is what you see real time, right? And it starts to play out. All right, you see this. Now say, hey, I like Pfizer. Yeah, we got to look at where we are in context. Oh, we're hearing about this China thing. Oh, they tripping over in China. They doing all kinds of crazy stuff. They walking around in hazmat suits, but it hadn't hit the US yet, really, until like February, right? I think we hit a first case in Seattle, but you're still watching it. And it's like, man, the stock is just getting killed. Now, if you are just trading strictly support, you can say, okay, my first support level is 33. I want to buy something there. Oh, then you turn around and you buy some more at 32. You buy some more at 29. You buy some more at 27. You could have just been buying on the way down and just getting worse prices as you go down. Versus if you see this trend line intact, what you can do is just draw the trend line and say, hey, I'm not going to buy until I see a reversal. And this is really your reversal point is right here. So you may have heard, an adage that people say, don't catch a falling knife. This could have been a falling knife that you were buying on the way down, but you started your buys too early. If you draw a trend line, the trend line will help you to see. Only start to buy once the trend line is broken, right? So that can be a helpful tool to save you. Now, what's going to happen is in that, if I waited here for this trend line to be confirmed and broken to the upside, I would have missed the absolute low here. I would have missed all of these lows, 26, 26, 25, 24. You wouldn't have caught these absolute lows, but that may be fine because you say, but the trend is now back up. More buyers are coming in. And so I'm gonna ride and really the trend is really around sentiment of what other people are doing. So here, everybody is selling. Everybody is selling. Once this new trend starts and it breaks up and that old trend is now violated and it's not valid anymore, then the new trend gets into attack. So really that trend will stop here and you start a new uptrend starting here. because you say, hey, I broke it, it's violated at this point to the upside. And now I take the point here, and I can take this point and just extend my slope and say, hey, now this is my entry area, because the downtrend has been violated by this big green bar, and I start my trend here and I go forward. So it can save you from starting your entry on a stock or even in a market that's in a huge downtrend, and you wait for confirmation to when the buyers come back in. So that, that's one thing that can help you. And then two, when you look at this particularly, this is where your horizontal support and resistance come. Look at what's interesting about this. Look, this is going back to 2019. Look at this, look at these areas, right? Look at these areas. Where does this trend line actually break and go to the upside? It just coincides with this $30 area. So that horizontal support in conjunction with your trend lines could have helped you, but they wouldn't have helped you on the way down, because you would have had these horizontal support. You could have bought here at the 34, bought here again at the 32, and you just would have been early. Whereas if you would have waited for the trend to confirm, your first buy would have been here at the $30 level and not at the 33 and the 32. So that's how you can use this trend stuff to help you on the downside. And then we talked about the upside trend. All right. And again, as you spend some time on these charts and start to identify patterns and stuff, you'll discover some things and you'll bring it back and be like, oh, this is what I discovered. And there's a lot of information in these charts. And sometimes you have to ask yourself, just go back to the basic. What does the candle tell me? Red candle says, I opened at a higher point and I closed at a lower point depending upon my time frame. What does the green tell you? Just the opposite. I opened at a lower point and I closed at a higher point in that, right? So those are the individual candles, right? But when you put these collection of candles together, then they start to tell a story. So if you just look at what's the story of these group of candles here, right? As you see that, these group of candles just tell me in their formation, just tell me I'm in a trading range. And the way you can see that is if I make this exact, let me pull it down to where I can get the tops of the majority of these. So look at that. So I got touch. I'll get my touch points. All right. So I got a touch to the bottom of the range, touch to the top. So if I were just to trade that range, I can buy at 33.65 and I can sell at 43. So how many of those you got? You got one. So you got let me just draw the line. Now this is not a trend line. I'm just drawing the touches. So here, that's one touch. Here, two touches. Here, three touches. Here, four touches. You could have made that trade 4 times, right? So you say, well, Mike, that's not much. Let's look at what that percentage is. So you could have made 2.76% on each of those trades, trading at 4 times, right? But multiply 2.76 times 4. 76 times 4 is what? 7 times 4 is 28. So 28 and 8, that's a 10% move. By just trading at 4 different times and gaining 2.76. A 10% move is a decent year, right? But we're talking in a matter of, what's this? Let's see. In a matter of 26 days. That's a little bit over a month, right? 20%. 10% in over a month. That's huge. But if you wasn't looking at this chart and being able to identify these things, you just have to spend time with it and just, a lot more based upon these charts than you realize. You're just going to have to dig into them and it's almost like you're mining for gold. You're mining for information that these charts are telling you. And sometimes you're going to find information that you're going to be able to make a thesis upon and create a trade on. And other times you're not. Now, if you're a long-term trader, you'd be like, I'm not worried about this. I'm just going to look at my long-term view, and I'm gonna just buy and hold based upon the trend or upon the support and resistance lines. Whereas if you're a trader, you want to see ranges. You want to look for ranges in your chart. You know. So if you looked at this range here, if you're a trader, it's wrong tool. See this range here, right? Look at that range. Down, up, down, up, up, down, up, down, up, back down, right? So you can see those ranges. And after a while, your eyes would just, and actually, if I take that one and extend it out, the range is even longer, right? Extend this. Range is even longer. And actually, I can put it here. So you can see that. You have 1, 2, 3, 4. Pull it down. I can get a little bit more. 5, 6 trades. So use the information. And again, spend time on the charts. It'll be helpful and help you to uncover this. And this is just like any other skill. The more you do it, the more you practice it and you go over it, you're going to learn different things. You're going to be bringing stuff back that you discovered to the group and say, hey, take a look at this, blah, blah, blah. And, kind of share things with us. So, again, thanks everybody. Any questions before we depart? Yes, no, maybe. Bueller. Anybody there? Everybody's on mute. Any other questions?
I don't have any.
Okay, thanks, Vanessa. Milt, did you want to look back at that options chain? If anybody wants to stick around and while we look at that option stuff, we can. Do you have time, Milt, or you need to drop?
Well, sure, but it's sort of like my strategy is a little bit different. So I don't want to get anyone confused with what I'm doing. Because basically...
so this would be different. And if anybody say, hey, this is just too much noise, just drop out. Don't let it confuse you. But for those that are interested, know that this is advanced and it's just going to be different. So that's a disclaimer. I would say new guys drop off. That would be my recommendation, right? Because it will confuse you. All right, go ahead, Milt.
Okay, so I don't know if you remember the last time. After earnings, I sold all my Palantir.
Okay.
So because this was a mean and a captive wood stock, I can't treat it like a regular stock.
Okay.
I have to see what is the background noise, what she's doing, and what all the mean people are doing. So that's why I sold it, because it's dangerous right now.
Okay.
A normal stock I would have not sold, because this I consider a long-term stock.
Yes,
I plan to keep it probably for the next 5 years.
Okay.
So I don't have any stock, so I need to buy it again. I sold it at $4.98. So basically, because I'm using options, I'm buying it back at $25.
All right.
So I'd never buy stock anymore. I only buy options and let them assign me the stock.
Got it. All right. So for those, if anybody's interested in this option stuff, and I know a couple people are, I put in a course here that's really good if you want to learn about options. And I like these guys because I believe they teach options the right way. and I do believe that there's a wrong way to teach options. And so these guys, in my mind, I don't trade options a lot. I'm familiar with them, but I'll put this link into the chat for everybody's benefit. Okay. So take a look at this course. It's a beginner's course on options trading. And it goes through and it kind of explains the things. But what Milt said here is that, all right, it said, instead of buying a call option for speculation to the upside, investors typically buy puts for speculation to the downside or to hedge their long shares. So what is a put option? Put options are similar to call options in the sense that they represent the theoretical equivalent. They just represent 100 shares of it. But put options let the owner sell stock at a price for a limited time rather than buy it. Now they're selling puts. So what Milt is in this case, you sold a put. So the idea with calls, anytime you buy something in options, you have a right to something. Where anytime you sell something, you have the obligation to fulfill at that thing. So let's say, for instance, let me just put it in simple terms. Say I have a car, say Milton, he wants to go on vacation. I got an RV, he wants to go on vacation. He wants to rent my RV. And so Milton say, hey, Mike, I want to rent your RV. I'm going out to Grand Canyon. I say, fine. So I'll say, hey, I'll charge you $100 a day, Milt. He said, all right, I can do that. So Milt is going to buy, he wants to buy that contract per se, or create this agreement. So he wants the right to be able to rent the RV. But if I take Milt's $100, I have the obligation to deliver him the RV, right? That's the kind of way it is with options. The buyer has the right to something based upon if the contract it meets all the specifications of the contract, whereas the seller, he has the obligation to perform on that thing. So in the instance in this short, what Milton says that I don't buy stock outright. And so what he does is it's a separate way to go through and say, hey, so if you just went and bought $25, if you bought one share of Planetary at $25, so let's see what it's trading at. So it's trading at $24, right? So if you just went and bought 100 shares of this, it cost you $2,400. Where Milton's saying that I don't want to just go spend $2,400 for the stock outright. What I'll do is I'll go sell a put and basically collect some premium. And so what it means is, as opposed to buying the shares for $24 outright, he will sell a contract. Say he sells this 25 for $1.25. Every option contract represents $100 worth of stock. So if he sells this, what it means is that they're going to pay him $125 for the right to buy, for the right to assign 100 shares at $25 to Milt. Milt say, fine, I'll take that. I'll take these 100. I'll take that $125. And if the stock goes above the $25 price, then they're going to assign it to me. So whereas his entry price would have been $2,400 at the $24 level, his entry price on the assignment will be $23.75. So he'll make $25 cents a share, or $250 by doing that. Whereas before, if he just bought it outright, he just went in and put an order for 100 shares at 24, that'll cost him $2,400. But in this case, if it gets assigned to him at 25, then that means that his outlay was only going to be $2,375. So he'd have made $250 on that. So it's a different way of thinking about it. And if what I just said made absolutely no sense, go back to this course if you're interested and just get the basic understandings of a call option and then a put option. And then the other piece is, once you kind of understand what they are, then you have to really think about, are you going to be a buyer of the option or are you going to be a seller of the option? Because you can buy a call option, sell a call option. You can buy a put option, you can sell a put option. Until you get those mechanics kind of worked out in your mind, it can be a little bit confusing. But given what Milt said, and I know what he's saying in that, he's saying that I just don't buy stuff outright. I just go and sell a call option in it, and I'll make the premium if the stock goes lower than that price. If it doesn't, then I just keep the premium and I'll just put another one on the next month and just keep collecting premium until the stock gets assigned to me. Now, if you want what they call a deep in the money, so the stock is trading at 24.81. So what he can do is go deep in the money and buy 29, meaning that they'll assign the stock to him at $29, but he's going to collect a premium of $5.30, right? So if he collects that premium of $5.30, you take the 29 minus the 530, that's going to give you what, 24.70? And so again, he's still going to get the stock, or is that 23.70? Yeah, 23.70. So he's still going to get it cheaper than the $24 price. He's going to get almost a 30 cent improvement on the price at 23.70 versus the 24, right? But it could happen though that he holds it, and if he holds it and the stock doesn't move, he's going to get paid for just waiting on this option. So so there's a bunch of different factors in that, but the overall strategy is, I want to buy something, but I'm gonna let somebody pay me to buy it. That's probably the easiest way to say it. Yeah. Milt, did I explain that adequately for you?
Yes, you did, but you made me see that I was not greedy enough.
And so you sold the 24. You sold the 24s, or you sold the 25?
Oh no, I still have it. It's just that I should.
No. I mean, to enter the position. What did you buy?
Oh, I did the 25.
You did a 25. So you sold a 25, right?
Mm-hmm. Yeah.
Okay. Yeah. Oh, so you're saying you should have went a little deeper.
Yeah, I should have went deeper and shorter.
Okay.
Make them assign it to me. So
yes. Yeah, I could definitely see that. I can see that. And it's crazy because options, they, no pun intended, but they provide you a lot of flexibility and options to do different things. Once you kind of get the basics of the strategy, it's good. And so actually I have I did a cover call on NVIDIA. I have a covered call on NVIDIA. Let's go to their options chain. So a covered call is you buy 100 shares of the stock, and then you turn around and sell a call option against it. So it's called a covered call. So I think my covered call is a I think it's a September 200 or 205. Let's just say a September 210 for the purpose of this, right? Or just make 200, make it even. So I have 100 shares at 185, and then I'm gonna sell a covered call over top of it. What this does is when you sell that covered call, here, let's just do the 195 because it's closer. Basically, it's a $10 spread between where the stock I have and what I'm selling it for. So if you say that $10, so $10 over, I don't know, what's the math there? So you say $10 over 185. So that's a 5%, right? So what it is that I sold that for 5% upside, but I'm going to collect $1.35 a share. So $135, right? And what I'm doing is just saying, hey, if this stock gets above $195, assuming my entry price is $185, I will have to deliver that stock to the buyer of that call option that I sold at $195. But I get to keep the $1.35 or the $135, and I get to add on that premium, the difference between 185 and 195, which is about a 5%. So I make 5% on that plus $135 over, 185, whatever that percentage is. So I'll make those two numbers. So let's just say for the raw numbers, so that'd be 10. So I make $10 here. So that'd be $1,000. So I make $1,000 there plus $135. So that'd be $1,135. So if you take $1,135 over, what's that, 1850? Yeah. So 1135, 1850. So you're talking, it's not right. It's the difference on that. No, 18,000. There we go. I was like, man, that number's not right. So I'll make about 6% on that trade, right? And 6% in less than 30 or 45 days. And you can just repeat that. That's not bad. So if you do that once a month, so you got 12 months, 6% times 12, was that 48%? You did that, and that was if it was called away. If it wasn't called away, then I would just keep the $1.35, wait till it expire worthless. I keep that, and then I put it back on and do it all over again. So that's a covered call strategy. It's more of an expensive strategy because it requires that you buy 100 shares to start the strategy. But you could do the same strategy with options on both sides and do what is called a synthetic covered call, where you just buy the 185 at this level, and then you just sell a higher strike against it. So, but again, this option stuff is way more complicated, and you got to get the basics down, because if you don't know what you're doing with options, you can lose your shirt. So, matter of fact, I just talked to a lady yesterday. She know I in the stock area, so she told me that she had bought a Pfizer $50 call, and I think they expired yesterday. And let's see, we can find that real quick. I'm just giving an example. To me, I don't know why she was buying that, but she bought a Pfizer 50. So yesterday, Pfizer closed at 48.72. So she bought a call option at 50. So whatever she paid for it, and don't even have an option chain for yesterday. I'll have to go and look at an old one, but let's just assume that this was yesterday, right? It's not. So what happens is her option was not, her stock price was not above $50, which means that her option expired worthless. So whatever money she put in it, she lost, is really what it came down to. Thinkers, the way that these guys teach options, they never have you buying a call option by itself. They always do it as a spread. And so, again, I like the way these guys teach options, because sometimes the way other people teach options, they don't tell you about the risk. And if you don't know what you're doing and you have different factors within options working against you, you can lose a lot of money pretty fast too, because options have expirations. And, if you buy something, you're 45 days, 60 days, 120 days out, those things can expire pretty fast. And if you don't know what you're doing, you can lose a lot of money. So, so I see Brenda and Vanessa still on. If you all are interested, I think I put the link in the chat. Let me make sure I did. Yes. Spend some time and go through this course. And if we want to have a session on options, we can do it at another time. We won't we'll let the people that want to just talk specifically options in that call, and we can go through it and just start, getting an understanding of it, whatever questions you have. Milton has some experience in it. He can lead us, in some of the discussions on it as well. And we can just kind of, learn as we go. But it's a different animal. I will say that. Milt, you have any discussions on options that you want to, tidbits you want to share with Vanessa and Brenda?
Yeah, one is a course you were talking about. I'm sorry, my throat course is giving out. The course you were talking about, don't buy options unless you have gone through a course or something. You will lose your money so quick. You won't even know what happened.
Yes.
And then once you do, you learn what he said about credit spreads. The only reason I do not have a spread on the Palantir is because I was going to buy it no matter what.
Yes, definitely on that, Milt. And so, and what's implied in Milt's statement is that his desire is to obtain the stock. He's just using the options to get a little bit of extra premium, to collect some premium on it. So it's basically like saying, hey, I can, so make it into an shopping analogy. You can go buy those shoes from the store at the price that they're selling them for. Or you can put a option in on it, sell a put option, and somebody will pay you to buy the shoes, where you can get basically you can get a discount on the shoes. It's probably the easiest way to say it. You want to buy the shoes at what they're selling them for with the sale price, or do you want to get them with you got a coupon that's going to allow you to get them, say 5% off. That's probably the easiest way to explain it. So whereas Milt doesn't want to pay what the sale price is, he has a coupon, and the option gives him a coupon. That's probably the best example. Does that make sense, ladies?
It kind of does. It kind of lets me know that I was taught wrong. so I'm struggling a little bit.
Well, and so that's, yeah, I would agree. The thing about options, you have to, you have to really get into like all the mechanics of an option. So let's just pull up an options chain. So the things in the options that you have to look at is the strike price, the expiration date, and then and they don't even have them here. Then they got what they call are the Greeks, right? But we won't worry about the Greeks for now. They're important, but for part of this discussion, you don't have to worry about them. But the main thing is the strike and this date. These two things are going to determine, along with the underlying stock price, because even though we're talking about strikes on Pfizer, we're talking about the strike in terms of the option, all of this is still predicated on what the underlying stock does itself, right? So with that, so let's say here, say if we were to buy this, let's look at, so we trading at 48.72. Okay, so if we say here, you wanted to buy a call option on Pfizer at 49. Say you bought that, and what's the latest price on that? The last price was, we'll just go with the last, 75 cents, right? So this is gonna cost you 75 cents for one contract, right? Or $750 for that contract, right? Because it represents 100 shares. So that's $750. So in order for you to get your $750 back, this stock is gonna have to close above $49. But really your break-even price is gonna be the cost of the option plus the strike price. So you really don't make any money in this unless Pfizer closes above $49.75, right? So that's just the mechanics. So by the 27th of August, Pfizer will have to close above $49.75 in order for you to break even. Now, what you also have working in against you as a buyer of this option is the expiration date. So what happens is every day that this stock gets closer to your strike, your premium starts to decrease. So you get what is called premium decay or time decay. As a stock gets closer to its time decay, it accelerates over the last 30 days. And so this price, if the stock just went sideways, let's just say for the next 2 weeks, the stock is traded at 48.72, right? This number is going to go down just inherently because you have time decay working against you. That's just built into all options. So what these guys teach is that they teach more to be seller of options, because if the option just in its structure are automatically have time decay built into them, why wouldn't you want to be on the side to where you have that time decay working for you as opposed to have the time decay working against you? And so, and what Milt is doing is that same thing. And so in Pfizer, he's not the buyer of this call option. He's the seller of a put option, where when you sell something, you collect the premium. When you buy something, you pay the premium. So he, in this case, let's say he sold a 49, he will collect $1.03, right? And so the only time he lose money in this trade is if the stock gets below $47 and $46.97, right? $47.97, because it's just basically the 49 minus the 103. But in this case, he wants the stock anyway. So he'll just say, hey, somebody's going to give me $100 to buy this stock. I was going to buy it anyway, but here's my coupon to get it at a discount where I'm going to pay $100 less for it than what somebody would go into the store and buy it for 49. That's really what he's doing. And options give him that, but this is a particular strategy that he wants. But in that case with the time decay, he's just saying, hey, I got, until August 27th, I know every day I'm gonna make a little bit of premium on this $1.03 because it's gonna go down every day if it just continues to trade sideways. And but since he wants the stock delivered to him, he'll just collect the $1.03 and doesn't really care about what happens, because he just collected $1.03 because he still wants the stock, and he was willing to pay the $49 for it, but he's getting it for $47.97. So that's just a scenario. So again, yeah, Vanessa and Brenda, definitely go through this course. If you have any questions, we can go through, and what we can do is use this course as a kind of as an outline, and we can refer to these pieces, go back to them, write your questions down, and then we can walk through the particular areas and the examples, because they have videos here for you to watch as well. And then we can go through them and kind of, work out any glitches we may have run into, or question that you may have. And I think it'll be a discovery process for all of us, because I understand them and their mechanics, but I don't play them every day. So I could be learning some stuff there as well. And Milt may be able to help us, since he trades in options more often than I do. So
I will admit I have been playing options for the past couple of years, and it explains why I'm losing so much money.
Okay.
Yeah. So I've gained some before, over time, but also I've lost more than I've gained. So okay. It explains the reasons why.
Well, and you have other things too here as well. So another piece. You see this number here?
Yeah, I learned about that yesterday.
Implied volatility.
Yeah.
Yeah. Implied volatility is huge. It's because, okay, in the example that we just talked about, let's just say Pfizer just traded sideways, right? So let's say you bought the call option and the implied volatility was, so right here it says it's 33. let's say this was double at 66 when you bought it yesterday, but today the implied volatility went down to 33. In just a simple statement, when volatility is higher, call options and put options are more expensive. When implied volatility is lower, they're cheaper. So what happens is some people just play options just for volatility expansion and contraction. So you could say, if you bought a stock and the volatility was really high, if you bought an option and when you bought that option, the implied volatility was really high, that means that you paid more for it than you would if it was at a normal level. Mm-hmm. So if you did that and you wasn't even aware where the implied volatility was in comparison to its normal historical volatility, you would be overpaying for something that you didn't even know. So stated another way, you go to the mall and you see these shoes and you're like, oh man, them shoes are $60. But you didn't realize that, at a store, at one of the little strip malls had them for 45. But you're paying a higher amount for them because you didn't realize that the implied volatility was higher than what you didn't know. And it's just there. And if you just bought it kind of blind and didn't realize that, you're overpaying for it. And then the next day or within the next week, if that implied volatility goes from that 66 that we said here down to this 33, your options are going to be worth probably half of what you paid for it because you had volatility contract. And when volatility starts to decrease in that particular option, the premiums or the price that they trade for goes down and vice versa. So if you buy an option and the volatility increases really high, the stock price can stay the same, but just the volatility increase, you can turn around and sell your option more than for what you bought it for, but the price of the stock may not have moved. And it has all to do with implied volatility. But if you didn't know that, you can look up and catch a win, but more often it'll work against you because you also have time decay working at the same time that implied volatility is working. So it's like 4 factors. You have time decay and volatility, price movement, which is what they call a delta. And then you have, one is an interest rate thing, and it really doesn't come into play so much. But those other 3 factors, delta, which is the price movement. So what a delta says that every $1 change in an option price, if you were to look at the delta tell you what the percentage change in the option would be. So if you had a 30% delta, so if this went down $1, then a 30% delta say that the option price would change by 30 cents. So, but all of those things work together when you buy and you sell options. But if you're not even aware that they're working, they can be working for you or against you, and you have no idea why your price in your option is being affected.
Yeah. I mean, I knew about the time decay and I knew about the delta. I just didn't know about the implied volatility. So when I saw that yesterday, I was like, what? That explains a whole lot.
Yeah. So, and if you got plays and stuff, just ping me and we can put them up and we can do them on a call and just say, hey, this is what I'm looking at. And we can just start going through. But one thing I like about these guys is that here in each of these sections, they'll have a tasty trade approach, and they'll tell you the way that they prefer to do options. So even here, just really quick. So at Tasty Trade, we prefer to sell options because we have so many ways to be successful. Selling the put allows us to be the insurance agency of the casino, once again, where we're betting that the stock price will not be at or below our strike price at expiration. If we're correct, the credit we receive at expiration is for profit. And that's a lot said in this statement, but simply put, if you selling it and the stock doesn't move against you, you just collect premium. And they want to be premium collectors. That's their whole thing. It's almost like you got a house that you're renting out, and every month you're just renting it out to somebody that's going to use it, and you just collect and rent.
Mm-hmm.
Yeah. So.
Cool.
Yep. Got anything, Brent?
No, this is pretty new to me. So I've got to hear things a couple of times, which is why I stayed on, and then I'll check out the course and stuff like that. But
yeah,
so I haven't quite wrapped my brain around it to have a good firm picture of what it is yet. And so that's why I have to hear it a couple of times in order to solidify my thinking.
Yes, ma'am. Yep. Milk, you got anything?
Yeah, I guess the last thing I just want to, I hate to sound like I'm just always so cautious, but this is something that you don't put a lot of money in. You don't have to, because it's like you're playing with 100 shares or something. So it gives you such great leverage. So you don't have to put a lot of money in to make a lot of money. Let me just say that.
Right.
Trying to get off mute. Yeah, that's a great point, Milt. And what options is leverage. So you're using leverage to make your buys and sells either on the calls and puts. So it's gonna accelerate what you're doing. But using leverage is you put up basically. So in the case here, so we look here. So if you were to buy this call option. Checked it. Okay, here we go. So if you buy this call option, you can use $750 to control what control what $4,000 worth of almost $5,000 worth of stock, but you can only you can control it with $750, and that's the leverage aspect of it. But with that leverage comes these other factors that that is also working in that equation, and so you have to be mindful of that. But using small amounts to control large amounts of stock, it's useful, but again, you have to realize that how that leverage can work for you, what your risk is in that, and how all of those factors, kind of play out. So I agree with Milt. But also options provide another thing. Let's say, for instance, and you really can't, it depends upon how some of your accounts are set up. So let's just say, I think majority of us, Barry's a younger guy, but the rest of us in our 50s or higher, right? And so with that, you may have an IRA or a Roth IRA that you got a pretty good chunk of money in. So say, for instance, you got Apple. Apple's trading at $145. Let's say you got you holding $50,000, $100,000 worth of Apple, right? And let's say Apple is going up a lot. What you can do with options is options also provide you what is called a hedge. So you could hedge your stock in order to protect downside. So it gives you that ability. And so let's say we go to Apple here. All right, so we look at the Apple chart. And if I can put the right ticker in, AAPL. There we go. All right, so we're gonna look long term here. Let's go to a weekly. All right. So say you in Apple at this $118 level, but you see now we're at 148. You can say, hey, I don't want to sell my stock at 148 because it still may go higher. What you can do with options is you can buy a put option as insurance to protect against the downside. And you would just have to figure out how many you would need to buy to get 100% coverage for the number of shares that you own. So what it could do is, if you can buy those, it's going to cost you enough for insurance. Just like insurance, you pay insurance premiums. And if nothing happens, they just keep the premium. Same thing that an option does, a put option in this respect. But if something does happen, let's say you bought it at 148, let's say it drops back to 126. If you have enough options to cover each of your 100 shares of stock that you own, you can make money to the downside without actually selling your stock. So that's called hedging. So you can do hedging as well. So there's a bunch of different strategies that you can employ by using options to help protect your portfolios, to speculate, to do all kinds of things. There's probably, I don't know, they got a bunch of like names, because when you do call and put options, you can combine them in a variety of different ways to structure them to do specific things. And those are definitely advanced topics, but they're there, right? And so they just give you the ability to structure and do a lot of things more than what you could do with just buying and selling the stock. So, but getting those basics down is absolutely fundamental. If you don't have the basics and you know you're not aware of all of the factors, but to Milton's point, stop trading options until you get a good, firm understanding of all the pieces. So I will say this: get education, because you will pay tuition. It's just a matter of how you're gonna pay it. Do you pay it by going taking a course, or putting the time in, because this is actually a free course? Or do you go sit in somebody's classroom or take an online course and pay the money for it? Or do you do none of that and just go start trading them, and you just giving your money to the market because they will eat you up? So I would definitely say education on options is even more important than the education on the stuff that we've been talking about with stocks. All right. So thanks for sticking around. I know we ran a bit long, but I think it was good. Thank you all for the input and participation. And again, let me know if we want to break out and do an options call. We can do that. We can schedule it on another day, another time, and just be all options.